shares traded higher following Wall Street's positive mood. That's after aggressive statements from the U.S. Federal Reserve and before the Banko Sentral delivered what's already expected.
The bellwether index added 25 points to hit a one-week high. Banking shares understandably rallied, led by the biggest lenders BDO and BPI. Borrowing money likely will remain cheap, with the Banko Sentral saying it'll keep interest rates where they are now. The BSP says it allowed the momentum of economic recovery to gain more traction.
The Fed has been telegraphing where it wants markets to go, increasing risk now that there could be a hike in 2022. What that means for emerging markets and more specifically the Philippines, well, it does put a bit more pressure on those emerging markets with high external debts. Philippines isn't so much one of those.
The BSP's decision comes after the Fed prepared the ground for a possible dialing back of some of the support it gave to the U.S. economy.
We do see the Philippines beginning to hike next year. Now, how many hikes? I think a lot of that will depend on to what extent the Fed begins to tighten in 2022.
That's the monetary policy side. The economy stands on two legs, with fiscal policy or public spending the other support. The budget deficit tripled in August as expenditures exceeded revenues. Fitch Ratings Research Unit weighs in.
What we do expect is some more fiscal consolidation next year. We do expect the Philippines, public debt risks to be fairly contained, just because we're not seeing it borrowing massively externally.
Central bank signals on when it'll start raining cheap money policies have been affecting not only stocks, but also the peso. Fitch Solutions forecast the peso to tumble to 49 pesos and 20 centavos this year and to 51 pesos per dollar next year. Lois Calderon, CNN Philippines.